focus now and let's talk about the Allcargo Group. A lot of geopolitical issues. So what's really happening to the freight rates? What's happening with the supply chain linkage as well? Let's try and understand all of that. We have with us Ravi Jakhar, the Chief Strategy Officer at Allcargo Group, joining in on the show right now. Ravi, hi, morning. Good to have you on ET now. Firstly, give us a sense on the international supply chain volume, which showed improvement with FCL volume registering, the highest ever volume growth. What do you think are the growth factors from here on? And do you anticipate a further increase when it comes to volumes in particular?
Yeah. So if you notice, over the last few months, we have seen some renewed momentum in the volumes. It was around mid of June when the international trade started looking upwards, and we have been a big beneficiary of that. We had a good, strong month in August as well now, which has again been more than 800,000 cubic meters in the LCL business, which is near the all-time highs. In the full container load business, we actually had our best month ever. We registered almost 56,000 TEUs. That's been the highest ever. So what we are witnessing is that we are finding a broad-based recovery now. Europe, which was lagging behind, is also now starting to show green shoots. We, in fact, had a marginal growth in the LCL volume in Europe as well. I would rather say, bit of an aberration. India and Asia Pacific was marginally down, but that's not a structural thing. On the FCL side, we have seen that right across the board, whether it's Latin America, India, or Asia Pacific, we have seen growth. Now, from here on, as you are aware, we've been seeing downward trend on the interest rates. That means disposable income in the hands of the consumers is going to increase, and that means more trade. So from our perspective, we are seeing renewed optimism around the international trade. We believe that early next year, hopefully Europe should also see a revival. The volumes across America and Asia are already seeing a positive trend. And at least at this point in time, I would say we have a good visibility into the next couple of months, and the momentum looks strong to me on the international business.
Bulk deal which happened, I think, last week when Nandan Nilekani's wife, Mrs. Rohini Nilekani, is bought into Allcargo. Is this just open market transaction, or there's some indication of a long-term partnership with them?
So that's an open market transaction in Allcargo Group, which is the domestic side of the business. And that's been, it's based on the shareholders' confidence and investors' interest that they participate in the stock. As a company, we would not comment much on that, but always happy to have good shareholders on board.
I understand that. So I want to clear the air that this is not an indication of any strategic partnerships. The open market transactions, you're a listed stock, investors will buy and sell. What you're confirming to us is that this is an open market transaction where an individual has decided to invest in your company. That investor comes with a lot of pedigree, so it's great to have good investor, but nothing beyond that. It is not like a long-term partnership which has been planned with Mr. Nilekani and his family office.
That is right.
And is this their first investment in the company, or they've been historical investors in Allcargo?
To the best of my knowledge, they have invested now, but I cannot, for certain comment on the past holdings.
Let's go back to business. That is what we should discuss then. Why is there such a big bump up in the monthly volume? What has changed? Because your business ultimately is a business which is dependent on where trade in the world is moving. In last 90 days, your business has gone up exponentially, which is what data is indicating. But in the world, nothing has changed which would support this kind of a demand coming.
So basically what's been happening, if you look at the historical trend, with an exception of last year, as a company, we've been constantly expanding our market share. We are today in the strongest competitive positioning than we have ever been in the LCL market. Our unique dominance there allows us to grow much faster than the market. Now, what is happening structurally for the 12 months to 15 months until June was the markets were declining. And therefore, even to hold the volumes, it was a bit challenging. Now, as the volumes are stabilizing, even if there's not a big momentum on growth, we are able to now continue on our journey of market share expansion, and that is allowing us to grow faster than the market. Having said that, the base increase in demand is certainly there. That's the reason why you would notice the freight rates have also started going up. So I think it's a combination of industry tailwinds and renewed momentum on the growth story, which is allowing us to, like I mentioned, FCL is the all-time high. LCL is also second consecutive month over 800,000 cubic meters, and we see the momentum to continue now.
For our viewers, what is FCL and LCL? I mean, these are technical terms, at least for our viewers. What are these terms?
So FCL is the full container load, which is when shippers are shipping the goods in the entire container. These are typically larger customers, and LCL is the unique niche product that we do, wherein somebody wants to just send 1 cubic meters of handicrafts somewhere deep in the interiors of India into Latin America, we take care of that because we operate like Uber of shipping, which means that we operate these containers which don't have to be booked in full. And that's a huge, advantage to exporters across the world, whether it's India, Latin America, or even Asia Pacific. They could just book 1 cubic meter of cargo and we have scheduled services, and that too 2,500 trade lanes. This is the biggest network the world has seen in the LCL and compares with the biggest of the shipping lines as well. So this is what the business primarily is. You could just ship 1 cubic meter of cargo from anywhere in the world to anywhere in the world. And like e-commerce, like you go on Amazon to check the product prices, with our business, you could just simply log in online and get an instant door-to-door quote, which is currently live in about 58 countries, which basically covers all the important ones.
You missed that point. Where is it that you said that the maximum demand is currently coming in from globally?
So we are seeing, over the last 3-4 months, we have seen revival in the demand in Latin America. India has continued to remain strong. About 5 months ago, we started seeing revival in China, and Asia Pacific again has been good, Vietnam, Philippines, etc. This month, we have seen marginal improvement in Europe as well, as far as the LCL is concerned. On the FCL, primarily 3 key drivers: Latin America, Asia Pacific, and India. That's how the market has been growing for us.
Because exports are picking up, can I put it very simple that the script of how your business would move is that look at India's export data, if that is growing, you will grow. Is that as simple as that?
For the India business, yes, but India business is a part of our global business. We are present in over 60 countries with our own offices, and the total network spans 180 countries. So primarily, I would say it's a combination of the global trade environment and companies' relative expansion and growth in market share. These are the 2 key drivers which drive our volumes and business upwards.
India of the total kitty?
Sorry?
How much is the India business of the total kitty of Allcargo?
So India business on the international supply chain should be about 15-20% in that range. And then we have the domestic business, which we operate under Allcargo Gati and Allcargo supply chain. That is primarily 100% based in India, which is the express distribution and the warehousing management solutions that we provide in India.
Okay, I'm just going to get into the Gati business, and it's a brand which we associate with. It's a brand which, in a sense, really changed the way how the logistics or the courier industry would move. Where is that business headed? There is B2B, there is B2C, there is D2D, there is e-commerce. A lot has changed for a business like for a business in which Gati is. Where is that business headed?
So Gati has seen a phenomenal turnaround journey over the last 4 years since we acquired. From being in every kind of trouble, today we have the best in industry cost, and that allows us to be competitive and improve on the profitability. So if you would notice, from March 2024 onwards, the costs have been constantly down, and therefore the profit margins have expanded. The business that we focus on is B2B. We are not focusing on the B2C, which is delivery to consumer households. We specialize in the B2B delivery, which is your textile, retail, electronics, companies distributing from factory or a warehouse to a warehouse or a retail shop. That's the business that we focus on. And Gati has always had the deepest network in the country. And now with the entire transformation, it also is setting up the world-class hub infrastructure, the latest in technology. So all of that is powering the company forward now.
Right. Great to have you on the show. Thank you so much for taking the time out today, Ravi, and helping us analyze how your business really is shaping up. That, of course, is the Allcargo Group talking to us specifically. In the meantime,